Hey everybody, Brian Shannon here from alphatrends.net. It's Wednesday the 15th of May and we had a big day for the markets. New high for the all-time high, that is, for the S&P 500. Just 2 weeks ago, we were testing that year-to-date anchored VWAP and we've bounced strongly from there. And that's why we look at that anchored volume weighted average price. We saw this as a potential level of resistance, but it didn't offer resistance. So there was no reason to sell there. Instead, this market has continued to rally above that rising 5-day moving average, and it remains innocent until proven guilty. As I've been pointing out, don't listen to people who are talking about volume and the fact that it's up on light volume. It simply does not matter. We get paid to trade price action, not volume. If you're concerned about lighter volume, all it means is be aware of that and raise your stops on the stocks that you're in, the ones that you're concerned about. Yes, it might mean that we are, running on fumes here, or there's just a simple absence of supply and the buyers are in control. So just accept it for what it is. It's a rally. It's an uptrend. It's new all-time highs. There's no reason to fight this type of momentum. It's really foolish. The NASDAQ, same story. We had our bounce, in this case, from the anchor from the October low. Nailed that one perfectly a couple weeks ago, and we've been rallying since then. And here also, new all-time high for the NASDAQ as well. Shorter term time frame, we've been above this rising 5-day moving average. We've been above the week-to-date volume weighted average price. There's just no reason to sell it short. It's really kind of foolish when people do that. I used to do it early in my career, thinking, hey, it's up too much or whatever, and learn the hard way. You just don't fight momentum like this. The buyers are in control. The Russell 2000 looks like it's going to maybe head for a new high for the year as well. It's not a new all-time high, of course. We're going to talk about crypto at the end of this, by the way, but it is a significant level and, nice rally here. The problem is when I say nice rally in terms of percentage, but in terms of has it been tradable with all these gaps, I have stayed away from the Russell 2000. I have no interest in this type of gapping activity each day. If I wanted to trade something that does that, I might as well just trade gold or something along those lines. Semiconductors, not a new all-time high, but closing in on the closing high. The closing high was actually right there. This is the all-time high up here intraday when we had that one reversal. But same story. We're above a rising 5-day moving average. Just keep it simple. The buyers are in control. If we're extended and you don't want to buy, great, but don't short it because it can continue to move higher. Maybe instead, or not maybe instead, the better scenario is to wait for a pullback and then buy strength after that pullback with a stop close by. That's the way you want to look at it. The Biotechs are back above their year-to-date anchored VWAP and the 50-day moving average. This market has been a little bit gappy, not very gappy, actually, 3 days in a row here. So all of the range, 90% of the range or so, has been taken up on the open each day, so leaving very little opportunity for actual trades unless you're, of course, holding overnight. But, low-risk entries haven't really presented themselves well there. The financial stocks continue to do what they do best, which is to just grind higher highs and higher lows above a rising 5-day moving average. Energy names are still kind of a waste of time here trying to balance out. Let's look at crypto. Here's Bitcoin, and Bitcoin, we've been hanging on the volume weighted average price from the year-to-date low, and that is where we found buyers this week, and strong enough that it did provide support. I was kind of thinking that we might come back down and test the year-to-date anchor down at 57. That didn't happen. I don't short these things, so it doesn't bother me. I got back involved on the long side here, and I'm looking at it as, you don't want to chase it in this area simply because you have to ask, one, where has it come from? It's just had a nice move. Now, crypto trades a lot differently than stocks. You can't really analyze it the same way you would analyze a stock, but you want to look at the same principles and, ask yourself, where has it come from? Well, it's just come from 60,000 to 66,000, so that's 10%. It doesn't mean it can't continue to move higher. What it might end up doing is actually breaking beyond this high and then perhaps pull back. We're at the 50-day moving average, which is declining. This is where we were 50 days ago, and we're at the anchor from the year-to-date high as well. So maybe we go break this high, begin a little pullback that makes a higher low, and then that would be the real place where a sustainable rally to new all-time highs could emerge from. That would be the lower risk way. As I mentioned, I'm back involved in crypto and in Ethereum, same story. This is what we were looking for in Ethereum. I was thinking that, we broke that trend line again, and we had this pattern of lower highs and lower lows that we have mentioned, and we still have that pattern intact. I was thinking maybe we could drop down to this anchor, rally up, create a higher low, and then get going. Instead, let's just look at a clean slate. We're right now, today, with this 5% rally in Ethereum, you can see that we're right at these three levels right in here. One, the anchor from the year-to-date low. Not really that important because the low for the year occurred pretty much, on January 2nd. So the year-to-date anchor, the black one and that green one, come together in the same place. So we're at that level, and we're at a declining 20-day moving average. Maybe we do this. Maybe we run up to the 50-day moving average, create a higher low along that 20-day moving average, rally up to the year-to-date high, and then up and away. Things are looking more bullish, but they're still not clear that the buyers are, 100% back in control of Ethereum. So take that for whatever way you trade these markets.